Live from London, this is Bloomberg Daybreak Europe. I'm Dominik with your top stories. Stocks gaining, oil falling as Iraq signs a deal to resume crude exports that avoid the Strait of Hormuz. This as President Trump lashes out at NATO as his calls for help in the key waterway go unanswered. The Fed expected to hold in Chair Jerome Powell's penultimate meeting. Investors await his comments on the impact of the Iran war. Plus, Bloomberg learns that Unilever is considering splitting off its food business. We'll have more on that Bloomberg scoop. So, as we've been seeing, as goes the front-month oil contract, so go equities. And it looks like that's what's going to happen today as well. We have oil calming just a little bit, although I will point out we're still above $100 on Brent. But that spread from Brent to WTI is widening. WTI just above 92 at the moment. This two-year yield also very much in focus today with the FOMC meeting. Not that anyone is expecting the Fed to do anything but stay on hold, but they will be interested in what Chair Powell says about the impact on inflation of the Iran war, and particularly inflation expectations. FHN said you'd want to see that two-year yield move right up towards 375 before the Fed would actually consider moving. Let's take a look at some other assets. Gold, by the way, is below $5,000 today. And if you take a look at futures, we are pointed higher. It would potentially be a third day of gains, although we are still negative on the year for the S&P and the Nasdaq 100. We also get Micron earnings later, which could have an impact on tomorrow's action. The dollar index then down about 0.1%, as you see just a little bit of enthusiasm back in this market, and perhaps that dollar trade coming off ever so slightly. Those risk events then at 8:30 a.m. UK time, we get Tencent full year earnings. We'll obviously be looking for the impact of their agentic AI efforts. The Fed rate decision is at 6 p.m. UK time, with the presser about 30 minutes later, and then Micron earnings after the market close. This morning as Iraq signs a deal to resume exports via Turkey that would avoid the Strait of Hormuz. Shipments are set to resume in about an hour's time. Let's check in on market reaction and, of course, wider Asian markets with Winnie Su now in Hong Kong. Winnie.
Yeah, morning, Vani. As you just mentioned, that resumption of oil export from Iraq is actually driving oil prices lower today, now just hovering around that $100 per barrel after having risen about 3% yesterday. Now, that is just a partial relief as Iraq actually, the production of oil from Iraq actually is now just about 1/3 of what it used to be before the closure of the Strait of Hormuz. But it is enough to lift sentiment in Asia, and we are seeing that MXAP here up for a third day. Now, a bit of a weakness when it comes to the Chinese shares, and that's also coming after President Trump now confirmed the delay of the meeting with China's Xi and expecting the meeting to happen in about 5 to 6 weeks. Now, flip the board, we take a look at some of the sectoral moves because the highlight still is in the tech sector. You're looking at Samsung Electronics jumping more than 6%. The company had an annual shareholder meeting today with highlights around the still very strong AI demand, as well as the tightness when it comes to memory chips. But on the other hand, we're also still getting these tailwinds from the series of bullish comments from Nvidia's Jensen Huang from manufacturing more H200 chips for China, as well as saying that OpenClaw, China's OpenClaw, is actually definitely going to become the next ChatGPT. So you can see that the shares related to OpenClaw, Minimax, and Zhipu both up double digits. Now, flip the board, we also take a look at Japan because just like other areas in the world, we are also waiting for that central bank decision from the Bank of Japan tomorrow. But also tomorrow, we do have that meeting between Prime Minister Takaichi and President Trump. Now, things are getting a little bit more complicated now that Trump said that he is no longer needs help from his allies, including Japan. But we are still hearing that there is going to be a joint agreement when it comes to development of rare earth between U.S. and Japan. Hence, we are seeing that trading companies, specifically in Japan, leading gains of the broader Japanese stock market. Back to you, Vani.
All right, Winnie, thank you so much. That's Winnie Su there in Hong Kong. U.S. President Donald Trump then has given up on efforts to recruit partners for the war with Iran. Germany, France and Norway are among those that have explicitly ruled out participating in the U.S.-Israeli operations. Trump scolded allies who openly rejected the appeals.
I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine.
For more, we're joined by Bloomberg Horizons anchor Jumana Bersetchi. So, Jumana, there's little sign that Europe and Asian nations are willing to join the fray. Where does that leave President Donald Trump?
Yeah, well, it looks as though he's abandoned his efforts now to build up a coalition, at least with some of these European and Asian partners. You were just saying there, it's been explicitly ruled out by Germany, France, Greece, by Canada, by Norway. I mean, these are major nations saying that they're not going to subscribe to this maritime mission. And then also we just played some sound there from President Trump, essentially taking another jab at NATO allies, saying that this could have been a real test for them. Because we don't need them, but they should have been there. So it really just underscores the cavalier attitude that he has and has had towards NATO partners. But it doesn't just stop there. Even with Asian partners, he also put up a post saying that he doesn't actually need the help of the likes of Japan, Australia, South Korea. There you have the post up on the screen, signaling that they are perhaps looking at other means of trying to reopen the straits. I will say that overnight, though, one country seems to have thrown their hat into the ring. These are comments made by a senior UAE presidential advisor, Dr. Gargash, and he was delivering comments at a think tank, and he was asked about the Strait of Hormuz, and they said that the UAE may consider getting involved in the efforts. So maybe we're in a situation where the U.S. might get some support come through from the Gulf states. But as it stands right now, just to give you some more context here, 20 vessels have been targeted since the start of this war, which underscores really just how much risk there is still for any tanker looking to pass through the transit. At the same time, over the last 24 hours, about a dozen Iranian-linked vessels have managed to successfully pass through, which tells you that Iran are still effectively maintaining control of the passageway of these tankers and these vessels. And it is a political hot point. But as long as the Strait of Hormuz remains effectively shut, we're going to continue to see upward pressure on these oil and global energy markets.
Jumana, Iran has confirmed now the country's top security official, Ali Larijani, was killed in that Israeli airstrike. What does this do for any hopes of maybe negotiations or a ceasefire or even peace eventually?
It doesn't really appear that that is on the table, Vonnie. This is day 19 of the war. No signs really of things de-escalating. The response from the IRGC, a commander, has come overnight after they confirmed the killing of Ali Larijani, of course, a key figure within the Islamic Republic's power structure. And they have said that they vow to retaliate in revenge, and they have actually subsequently over the course of the evening continued with their volley of attacks directed at Gulf nations, once again at the UAE, at Saudi Arabia, at Kuwait, the US embassy in Baghdad, and of course a renewed set of attacks on Israel as well, specifically in Tel Aviv. So no signs of things letting up. As for Ali Larijani himself, he's been a long-standing member of the power structure within Iran. He was head of the National Supreme Security Council. He was responsible for many of the security and even military decisions that would have been made in this war. Some analysts are saying that because he was more of a political face to the Islamic Republic, he could have been a window, a sort of channel for diplomatic efforts in the future. But at the same time, you must also not forget that he played an active role in the brutal suppression of any of the demonstrations that took place, particularly in the crackdown that took place back in January, very close to the former supreme leader, and was a key figure within the regime. And so the effective taking out of him doesn't necessarily mean that the power structure itself is being dismantled. And I should just say that we here in the UAE are getting alerts now. So I'm going to leave it there.
Yep. We heard you getting that alert there, Jumana. Stay safe. That is Jumana Bersachi in Dubai. Let's get more on the targeting of Iran's leadership now from Bloomberg's Dan Williams in Jerusalem. Dan, what's the thinking behind these targeted killings? What are the Israeli papers saying?
Good morning. I'll just follow up on Jumana's excellent overview of Larijani's position within the Iranian system. It's worth remembering that at the outset of this war on February 28th, statements made both by the US President Trump and the Israeli Prime Minister Netanyahu made clear that a downstream objective of this war was to free up the space necessary for the Iranian people, as they put it, the Iranian opposition, to topple the regime. It appears clear that that's partly being achieved by eliminating members of those regimes, especially ones that might have been considered most formidable in putting down opposition within Iran. So it would appear that in the absence of capitulation by the regime, in the absence of abdication by the regime, the allies are going for decapitation of the regime. There's also a bit of a ticking clock on this. This weekend is Nowruz. It's the Persian New Year. This is an ancient festival that well predates the revolutionary government, the Islamic revolution in Iran. It's obviously a focal point of the calendar for many Iranians who would like to see a return to pre-revolutionary Iran. And the Israeli Prime Minister said openly yesterday that efforts are underway to make the streets clear and safe for Iranians to come out and mark that festival. It's clearly a signaling to the Iranian opposition that the Israelis are using firepower, and perhaps the Americans as well, to remove representatives of the state who might try again to repress a groundswell of resistance, a groundswell of opposition, a groundswell of national solidarity. So that would appear to be the strategy as of now, firepower twinned with outreach to the Iranian people, the Iranian opposition.
Dan Williams, thank you very, very much. That is Dan Williams there in Jerusalem. And I just want to mention that oil has started flowing. We just got a headline a few moments ago that Iraq has started the Kirkuk oil exports via Turkey's Ceyhan pipeline. So this was a way to avoid the Strait of Hormuz if Iran and Kurdistan could get this oil flowing in an agreement, which they have done, and that oil has now started flowing. Small amount in comparison with what would be going through the Strait of Hormuz. Obviously, Iraq's production had already fallen to about a third of its typical production at 1.4 million barrels a day, and this is a few 100,000 barrels. But again, at least that oil has started flowing via Turkey's Ceyhan pipeline. Bond traders pairing bets that Fed rate cuts will happen this year, and that's, of course, ahead of today's rate decision. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, so what are we going to hear today? There'll obviously be growth worries. There'll be inflation worries building among traders. What will Jay Powell and the FOMC try to say to calm nerves?
It's going to be very difficult for the FOMC today, particularly for Jerome Powell. And traders can see that he's really between that so-called rock and a hard place. On the one side, we've recently had unemployment data in America, which is very weak. Clearly shows that the developments in AI are taking away a lot of jobs already in the United States. It's really undermining the whole white-collar sector from that point of view. And at the other side of the equation, since the war started, clearly there are signs that inflation is there's risks to the upside for inflation because of oil prices, energy prices around the world, which is also biting in America. We saw diesel prices hit $5 yesterday in the US. So traders can see this dilemma that the Federal Reserve has. On top of that, Bloomberg Economics has a very good report out overnight showing that on their nowcast models, we're seeing inflation tick up across the G10 space. We haven't seen it move up to this extent since late 2021-22. That was the period when the Fed was very slow to raise interest rates. They kept on talking about inflation being transitory. In the end, they had to backtrack and they raised interest rates very quickly. So this is the biggest uptick in inflation indicators since then. The Fed will be aware of that. So they have to try and tread a very fine line between telling the market that they're not that worried yet, they want a bit more time, but there are serious consequences if inflation and oil prices stay high for a little bit longer. It's a very delicate balance. We're probably going to see, in terms of the yield curve, probably some flattening of the Treasury curve to compensate for all of that. It is certainly going to be a very lively press conference, and you'll probably see quite a bit of volatility in the bond market as Jerome Powell is speaking later today.
Yeah, absolutely. A little bit more volatile than a typical FOMC day. Bloomberg MLive strategist Mark Cranfield, thank you so much. Still ahead, an exclusive conversation with the CEO of Heidelberg Materials as the Middle East conflict pushes up energy costs. But first, warnings that Europe faces higher gas prices as Iran attacks LNG facilities in the Gulf. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. European natural gas prices have increased since Iran stepped up attacks on energy infrastructure around the Persian Gulf. Forecasts suggest the effective closure of the Strait of Hormuz will force European countries to pay a significant premium for fuel into the future. Let's bring in Priscilla Azevedo-Roca. She is Bloomberg's European energy reporter. Priscilla, we're up something like 60% since the beginning of this war. This is serious for European countries who should be starting to refuel very, very soon, right, in the next few weeks to re-enter supplies into their inventories. What are they supposed to do?
Good morning, Vonnie. Thank you for having me. Yes, it's looking like we're up for a very, very tricky summer in Europe. Countries now with 20% less of supplies from Qatar in the global balance, countries now in Europe, they will have to compete with demand from elsewhere. Just to be clear here, how we got to the situation. Europe is still very much a net importer of energy, despite having evolved so much in the renewables and have built like immense infrastructure since it lost most of pipeline supplies from Russia 4 years ago. So now Europe has to look abroad to buy gas. And it buys most of its gas from the US, but taking 20% out of the Qatari gas from the global system means it has to compete with other countries in Asia, for example, for supplies. The problem here is that we're coming out of winter with inventories depleted. We are at very low levels compared to previous years because we had a very cold winter and we already came into the previous winter with stockpiles very low. So it's looking like it's going to be a very challenging summer for Europeans looking to buy gas for next winter.
And it looks like certain countries are starting early. Something like 3.1 terawatt hours of gas have been added to German storage in the first 2 weeks of March. Priscilla, put this into context for us. If we remember the Russia-Ukraine war, natural gas prices just spiked higher and higher and higher and stayed there for many, many months, causing awful problems and shortages. Are we looking at some kind of a scenario like that?
No, I think we are in a different scenario right now, because at the time of the Russia's war in Ukraine, it was a big shock and Europe had no alternatives. Since then, Europe looked at alternatives, and there are different places to look for gas, and there is renewables. We have built an infrastructure, but this comes at a cost. So we might not see the price spikes that we've seen after Russia's invasion of Ukraine and the energy shock that caused, but we will see elevated prices because we have to pay for that gas somehow. As you've mentioned, we've seen an early stockpiling in Germany. This is very unusual for the market because at this time of the year, normally, Germany is still withdrawing from the storages. But to put this into context, most traders are anticipating that April is going to be a very tricky month in Europe because it's when we're actually going to see the impact of Qatari cargoes not coming into the market. The Qatari cargoes, they're arriving in March. They've already sailed through Hormuz before the conflict erupted in the Middle East. They were already outside of Hormuz. So we are getting the supplies. The supplies are already contracted. So we're looking forward into April, when after Qatar Energy declared force majeure in its customers, we've heard, for example, from Italy that Edison said, one of its main companies, that they are not expecting at least 5 cargoes. That's less gas into the system, right? So that has a consequence into prices.
Priscilla, we're going to have to check in with you very soon again. Thank you so much for joining us for that update. That is Bloomberg's European energy reporter, Priscilla Azevedo-Roca. Coming up, the Greek Prime Minister on why Europe won't be drawn into the war in Iran. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Greek Prime Minister says Greece and Europe will not take part in military operations in Iran. That's in response to US President Donald Trump calling for help in securing the Strait of Hormuz. Kyriakos Mitsotakis told Bloomberg's Francine Lacroix there's no appetite for such a mission.
We will not engage in any activity in the broader area as long as there are military operations. We have been very clear from the beginning. We strengthen our defensive posture. Of course, we have a strong interest in the freedom of navigation. We have amongst us, leading Greek ship owners who are very concerned about what is happening in the broader area. But unless there is, and I think it's clearly not in the cards right now, unless there is a European endorsed mission, Greece will not participate on its own. And I think the likelihood of such a mission right now is very low.
Do you think the longer this conflict lasts, the more likely it is that Europe will be drawn in?
I think that Europe will not be drawn in militarily, but Europe certainly needs to focus on the economic ramifications of the crisis. We will have a very important European summit. I'm sure you'll ask me about that starting in 2 days. And we need to manage the economic and energy consequences of what could be, I hope it's not going to be the case, a protracted war. It's going to be a different story if the operations, if the military activity ceases in weeks, and it's going to be a different story if this war drags on for months. As far as Greece is concerned, we've been working actively for rapid de-escalation. We don't believe that the structural problems of the Middle East can be solved through military operations. At the same time, of course, we fully acknowledge that Iran cannot have nuclear weapons and cannot threaten its direct neighbors. But right now, the focus of my European colleagues is to manage the economic consequences of what could be a very significant energy shock.
The Greek Prime Minister there speaking with Bloomberg's Francine Lacroix. Now to some other top stories we're following this morning. The Pentagon is planning to mass-produce cheap drones it copied from Iran. The US's Lucas drone was created by reverse engineering Tehran's cheap and deadly Shahed drones and cost around $5,000 each. The one-way attack drones have been deployed in the Iran war instead of cruise missiles, which can cost millions of dollars each. A senior U.S. defense official tells Bloomberg the Pentagon is working to develop alternatives to Anthropic's AI tools. It follows the Trump administration's declaration of the company as a supply chain risk after Anthropic refused to relax safeguards governing the use of its technology. Coming up, President Zelensky reveals more than 200 Ukrainian military experts are now taking part in the Iran war. We'll get the details next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Iraq resumes oil exports via Turkey that avoid the Strait of Hormuz. This as President Trump lashes out at NATO as his calls for help in the key waterway go unanswered. The Fed expected to hold in Chair Jay Powell's penultimate meeting. Investors awaiting his comments on the impact of the Iran war. Plus, Bloomberg learns that Unilever is considering splitting off its food business. We'll have more on that Bloomberg scoop. So let's take a look at these markets then. As oil does begin to flow again via an agreement between Iraq and Kurdistan, we have Brent crude trading just a little bit lower. Mind you, we are still above $100 a barrel. This market trying to decide what's actually going to happen. I mean, these bring a few 100,000 barrels online per day, which is great, but does it solve, the big yawning gap that there is right now in what's been taken off the market and what needs to be on that market? Marketers trying to figure it out. Crude, though, is showing a wider spread between New York crude and Brent crude, and that could be a healthy sign. The 2-year yield down a couple of basis points. We're at 3.65, waiting obviously on what Fed Chair Powell has to say about not just the inflationary impacts of the war, but what impact it will have on inflation expectations, which he wants to remain extremely anchored, right? Every central banker does. And of course, there are all those other central banks this week meeting as well. Let's take a look then at some other assets. Gold is below $5,000 an ounce for the first time in I don't know when, but we do have futures pointed higher, both in Europe and in the United States. In what would be a third day of gains, we're up more than 1% this week so far on both of those indices, the Nasdaq 100, the S&P, the Euro Stoxx 50. That said, for the Nasdaq and S&P, we're down still on the year. The dollar index showing just a little bit of weakness there, but it's been doing plenty of strengthening. Time now for your front page news, all on the Middle East. The Financial Times has the director of the U.S. National Counterterrorism Center resigning in protest of the Iran war, the first high-profile defection from the Trump administration since the conflict began. The headline on Spanish newspaper El País roughly translates to Israel kills Ali Larijani, a key figure in the Iranian regime. And on the Wall Street Journal, its top story is Israel hunting down Iranian regime members in their hideouts one by one in a bid to create conditions for Iranians to topple their regime. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to Go. Treasuries and the dollar then both in focus as investors await the Federal Reserve's latest interest rate decision today. We're joined now by Ruth Carson, Bloomberg's chief Asia FX and rates correspondent. So, Ruth, just broadly first, what will be investors looking out for from the Fed today in particular, given that we're really expecting a hold in terms of the actual decision itself?
Absolutely. Swaps traders, future traders, all signaling towards a hold. So very much the focus will be on the messaging. The Iran war, the impact of higher oil prices on inflation, inflation expectations going forward. These are the things that investors will be looking for, and also obviously the dot plot. So key here is obviously what are higher prices going to mean for the Fed's policy path going forward, because we know while the dollar has been bid on the haven flows, treasuries haven't. So, and we know that treasuries are, the ones that dictate what bonds do around the world. So very much the Fed is kicking us off on a very central bank heavy week of trading, and very much that focus will be on Iran, oil, inflation, what's going to happen next.
Now, it's all coming at a time, of course, Ruth, when the conflict in the Middle East is extending and Treasury yields are elevated, although they have been coming off a little bit, the 10-year below 420 now. But is there a point when Treasuries become appealing again as a haven asset?
It's a great question, and it's one that's actually being tussled about from New York through to London, through to Asia desks. We know that the war broke out a couple of weeks ago. This is the third week in, and we're still seeing elevated yields here. So that is the question that is being bandied about every day when I speak to traders, from hedge funds through to your long-only funds in Asia. At what point do we actually get onto the Treasuries train? Is it yields at 425, 430? Is it oil at, higher prices from here when Brent is already still hovering above $100 a barrel? And right now we're not seeing, that big, strong bid. I think we probably need to see more of an escalation, and traders are saying, look, if there is a big growth shock, that's the moment that people will suddenly change their tune on treasuries and look to buy.
Ruth, the dollar has been strengthening against really every major and minor currency in the world since the war began. How much room does this trend have to run, or are we pretty vulnerable to some kind of correction, particularly given that, 22 banks are meeting this week. It's not just the Federal Reserve.
Yeah, and this is the funny thing. If you had asked me this question, say, at the end of December, the dollar bears were out in force. It was going to be the year that the dollar is going to fall, all the major currencies, it's the year of the yen, etc. And here we are, 3 weeks into the war, and the dollar is just still on a tear. And it's not really showing signs of really slowing down. And, when you look at where dollar yen is, for example, it's still close to 160. You look at euro dollar, 115, 116. Now, these are levels that kind of still show, and they're holding. They're not exactly whipsawing here and there. It shows you that the dollar bid is sticky, right? Hedge funds that I speak with are worried about taking big bids against the dollar at this point, especially because there are so many central bank meetings coming up. Again, it comes down to messaging. What are the policymakers going to be saying about inflation, about oil, about Iran, and its impact on their policy paths going forward? Then and only then, maybe investors will take the cue to go, all right, you know what? Let's play some bets on the other currencies.
Yeah, absolutely. Ruth, it's going to be a fascinating one, that's for sure. Ruth Carson is Bloomberg's chief Asia FX and rates correspondent. President Volodymyr Zelensky has revealed that more than 200 Ukrainian military experts are now working across the Gulf as part of the Iran war. Speaking before the UK Parliament, the Ukrainian leader outlined the support Kyiv was supplying to stop Iranian drone attacks.
There are 201 Ukrainians in the Middle East and Gulf region, and another 34 are ready to deploy. These are military experts who know how to help, how to defend against Shahid drones. Our teams are already in the Emirates, Qatar, Saudi Arabia, and on the way to Kuwait.
Let's bring in Oliver Cook, Bloomberg's chief Europe correspondent. Ollie, what role is President Zelensky trying to play in the Iran conflict here?
I think Zelensky is somebody who's really been able to turn very difficult situations into opportunities. And I think the Iran conflict, while it presents a great deal of difficulties for the Ukrainians, which we can get into a little bit later, there is also an opportunity. And that's the opportunity that Zelensky is trying to seize on. He's trying to seize on this ability to say that basically Ukraine is not just a taker of your sort of donations militarily, financially, but actually is a strong partner in trying to wage the warfare of the 21st century, because they can produce these drone interceptors at a much higher volume, much more cheaply than any sort of the major Western countries. We've been talking about the number of Patriot missiles that are being deployed to take out some of these drones, which is basically cost immensely ineffective, and the Ukrainians are able to do it at much less. So he's saying that basically they can make 200 or 2,000, I should say, drone interceptors every single day. Half of those would be eligible to export to other countries. And he was speaking there before UK Parliament, and he drew it very sort of clearly to the national interests of Britain. He says that British military bases in Cyprus, Ukraine is proposing a security proposal that would look like their experts going there, placing interceptor teams, setting up radars, acoustic coverage if Iran launched a large-scale attack similar to the Russians, and would guarantee protection from the Ukrainian side. That is the kind of reinforcement we, the Ukrainians, he said before Parliament, are ready to deploy across Europe. So this is really the pitch from Zelensky. I think there's also another opportunity here for Zelensky, which is trying to get the Gulf nations on board, saying that basically Iran equals Russia, Russia equals Iran. Many of the Gulf countries have been fairly ambivalent in terms of their support for Ukraine. So again, seeing another opportunity to sort of lend their help. And this is really the sort of the ambition for Zelensky. He was in the UK yesterday. He will be in Spain again today to try to draw attention back to Ukraine.
Yeah, I mean, this war in Iran, it's putting incredible strain on Ukraine, and it's a crucial moment. How important is it for President Zelensky to keep partners engaged?
I think it's very hard to sort of articulate all the ways in which the war in Iran is creating problems for Ukraine. There is, of course, the energy crisis, which is A, distracting a lot of the European partners to deal with their own domestic issues, but B, every single dollar you get in advance on Brent oil, on gas, that is a dollar that is going to the Russian war chest and their war efforts against Ukraine. So that is something that obviously Zelensky is very acutely aware of. The United States is intensely distracted at this moment. Their sort of efforts to have a peace negotiation between the Russians, the United States, and the Ukrainians is basically frozen, is on halt for the foreseeable future. You have the threats now, once again, from Trump to basically undermine NATO in some significant way that is never helpful to the Ukrainians. And there are a number of different domestic issues here in Europe that are causing difficulties into getting consensus to move the ball forward for the Ukrainians. For example, you had that 90 billion euro loan. We haven't talked about it in a while. That was approved back in December. That has hit a roadblock now. It is being vetoed by the Hungarians because of an oil pipeline that was destroyed by the Russians that's supposed to carry Russian crude through Ukraine over to the Hungarians. The Ukrainians say that they're trying to fix it. But these are all things that are coming at a very sort of fiscal cliff here for the Ukrainians, who are waiting basically to try to get that loan. They're also waiting for IMF funding. Zelensky is having difficulty passing some of his legislation through Parliament, which is making it difficult to unlock some of those funds. And we have been reporting that basically the funding situation for the Ukrainians becomes very, very dire in the next couple of months if they cannot unlock that money, A, from the IMF, but B, from the Europeans, 90 billion euros. That is supposed to fund 2/3 of Ukraine, their war effort and their budget for the next 2 years. And that is going to be another topic for European leaders to discuss while they descend here tomorrow in Brussels.
So many irons in the fire, quite literally, for Zelensky. Ollie, thank you so much. Oliver Cook, Bloomberg's chief Europe correspondent. Coming up, we're going to have an exclusive interview with the CEO of Heidelberg Materials as the Middle East conflict pushes up energy costs. That interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Volatile energy prices driven by the war in Iran threaten to squeeze margins for European industrial giants like Heidelberg Materials. Meanwhile, the company's pricing power is under fire as the EU considers delaying stricter carbon controls, a policy shift that would devalue the green transitions Heidelberg has already been investing in. With me now is Dominik van Achten. He is CEO of Heidelberg Materials, and thanks so much for joining. Dominik, we have to start with the increased costs due to the Iran war. Where are you seeing them? How are you dealing with them?
Yeah, I mean, Vonnie, thanks for having me. Obviously, the costs are coming up also for us. We are a energy-intensive industry and we are a transport-intensive industry. Now, on the energy costs, I think it works here and there okay, but on the transport side, obviously, we do see some cost inflation. That's why we also need to forewarn our customers that prices are going to rise. That's certainly going to happen. But overall, as a globally positioned company, we can cope with it for now quite well.
Do you have any estimate for how many percentage points prices might have to rise and when?
Well, we don't really work with price increases in general. We more work with surcharges. So we basically, this should be a temporary issue to be dealt with, not so much a general price increase.
When are you planning on implementing a surcharge?
Well, that's already on its way.
So in the next few weeks, customers will see it.
You know, Heidelberg Materials is a resilient company that we've learned through all the crises of the past, and we need to act fast. This is not about waiting for too long.
What kind of percent will it add to a customer's bill?
Well, not so much in the short term. Obviously, if this goes on longer, things mount up.
You've said acquisitions will contribute something like a third of your 7 to 10% average recurring operating income growth through 2030. Where are you looking now at the moment for potential acquisitions?
Yeah. I mean, first of all, we said in our Capital Market Day, we've got 10 billion to invest until 2030. We've just done a significant acquisition in Down Under in Australia. So it's about €1 billion worth. We acquired the construction materials side of the Maas Group, which is basically in the southeast of Australia and complements our existing market position very well. And that is also the trick that we are trying to do. We double down on the existing market positions and make them even stronger.
And the Turkish cement producer that you're, involved with, how close are you to securing control of that particular producer? What's the strategic rationale there?
It's been a long-standing joint venture for us in Turkey for more than 30 years. And we understand that our joint venture partner has a different strategic priority set. So we are in discussions with them how to set the joint venture up for success in the future.
Size and type of the types of things you might be looking at in the United States, which is a huge part of your custom, something like a quarter of your
Even
custom.
more, yeah, almost 30%. the US for us, or even North America, including Canada, is a very, very important market, and it's going to be a very important market going forward. However, you know, we have a very rigid financial framework, so we don't want to do crazy acquisitions, both in terms of size and in terms of financial hit to our financial metrics. So we're going to look at everything that crawls in the US in our markets in terms of M&A possibilities, but we're going to be very diligent and careful to execute only those ones that have the best strategic fit, the highest synergies, and the best financial return.
So are you currently doing due diligence on any particular companies?
Yes, obviously.
Where? How many?
There's not much I can tell you specifically, but it's going to be all across the US in different local markets.
Now, are you also in talks with the Trump administration? Obviously, it's in companies' best interests, it would seem, at the moment, to have an open dialogue with the Trump administration.
You know, it's not so much about the Trump administration. For us, we are, 30 or even more % of our business is infrastructure, so government related. So we do have talks with every government across the world, obviously also with the Trump administration.
Dominik, can I ask you when you think we might be going from a shock to an actual crisis? We heard from the steel lobby, and they said, it's only going to be about 2 months before we see actual layoffs.
Well, I mean, I think the actual situation is difficult for everybody, especially for the energy-intensive industries. So I think we all hope that things will be over fairly soon. I think we can deal with this, I'm of the same opinion, over a couple of months, but then at some point things need to calm down. I'm positive that also the American administration that goes for the midterms in November has some vested interest to get this conflict calming down very soon.
You've been deleveraging your balance sheet. You're in a pretty nice position now. You have all this money to spend. You just said it a few minutes ago. Are you thinking of giving back to shareholders a little bit more at all?
Look, Bonnie, we've increased our shareholder return quite a bit. We've done progressive dividends. We've done the share buybacks. We're going to continue with the share buybacks. We've even stepped them up in the last round, and we'll continue to have a very strong focus on our shareholder return. That's going to stay with us. But
no plans for increasing that dividend or anything like that?
At this point, we are still up for the final decision for the dividend of 2025 that the AGM will basically announce in May, and that should be a good step forward versus last year.
You've been doing a lot in carbon capture initiatives, but you have been relying on government grants. At what point do you see those grants going away or getting significantly reduced, and will that up your own capex?
Well, the government grants is one thing. The other one is the discussion around EU ETS right now, which, is the carbon scheme in Europe. And obviously, if Europe wants to make the decarbonization transition work, we need that carbon scheme. So we are a strong supporter of the EU ETS system. And I do not really understand that the governments are currently putting some question mark around this regime that has been there for more than 20 years. And we absolutely support it, and we have adjusted to it, again, resilience, and we are fine with the carbon scheme. Maybe it needs to be a little bit of renovation coming, but other than that, I think the framework is actually good.
Just a final one. We're looking at NCC's business. Obviously, Colas, CRH, that would have been a consortium. They decided against it, at least for now, I guess. How disappointed were you in that decision? Might it come up again in the future?
Look, you're well informed. I think we have a great market position in Northern Europe. So NCC is one of our big customers. So we are in constant talks when they changed their strategy. I understand that they had some interesting discussions with their shareholder base, whether it makes sense for them to keep the aggregates business and the asphalt business or not. We are in the process, but there is no final decision on that at this point.
All right, well, we'll have to have an update. And can I just congratulate you? We just got word that you had got an upgrade from Morgan Stanley in the last few hours. So congratulations to you and to your company, and enjoy your investor day. That is Dominik von Achten. He is CEO of Heidelberg Materials. Now to some other stories. Berlin's Brandenburg Airport is facing a complete shutdown today. A planned labour strike threatens to cancel flights across the board and disrupt plans for more than 50,000 travellers. No regular passenger services will operate after the union Verdi called on airport employees to stage a warning strike as it looks for higher wages. Nvidia is firing up production of H200 AI accelerators for China. CEO Jensen Huang says the company has secured licenses for many customers and is restarting manufacturing for a market once blocked by U.S. export restrictions.
We've been licensed for many customers in China for H200. We have received purchase orders from many customers, and we're in the process of restarting our manufacturing.
BHP has appointed company veteran Brandon Craig as its new CEO in what investors are seeing as a sign of continuity. Craig takes the helm of the world's biggest miner as it grapples with falling Chinese demand for iron ore and the wider shift towards growth, particularly in copper. Craig will take over from Mike Henry in July. Unilever is said to be considering a separation of most or all of its food assets as it looks for ways to streamline its portfolio. Sources have told Bloomberg the transaction would probably value the company's food business at tens of billions of dollars. We're told the company has not made any final decisions. Plenty more coming up. This is Bloomberg.
As soon as that war is over, which will be soon, your prices are going to drop like a rock. You watch.
President Trump speaking in the Oval Office yesterday, and of course that's what people will be hoping for, right? But right now it doesn't seem like there's any sign of it. And if you look at diesel, we're above $5 a gallon for diesel. You know who uses a lot of diesel is truckers. Cross-country truckers use a lot of diesel, so this is going to affect the trucking business, the freight business. Never mind all of the residential homes that actually use diesel as well in the United States. Many of those too. This is going to become an issue. It's already been an issue. Let's move to today's FOMC meeting, right? Because they were going to be asked about the impact of the Iran on inflation and inflation expectations. And of course, it's things like the price of diesel that will really affect inflation expectations. But you can see there's been a negative correlation between the dollar and US equities in recent months. The dollar has just been strengthening and strengthening. And equities, well, they've been very, very volatile. And then let's take a look at what traders are pricing in terms of Fed rate cuts. So Wall Street is calling for a steeper US yield curve. So obviously the front end to come down a little bit, but maybe the back end not to come down so much. No cuts obviously priced in today, and several banks are pushing out their cut expectations now. Goldman Sachs pushing it out till September for a first cut this year. Your risk events today then will get 10 cents full year earnings at 8:30 a.m. UK time. Agentic AI in focus there. That Fed rate decision at 6 p.m. UK time, and then more earnings after market Micron reports. Do stay with Bloomberg for full coverage of the Fed decision from 5:30 London time, including Fed Chair Jerome Powell's penultimate press conference. The opening trade is next. This is Bloomberg.